Greetings, market rebels. Welcome to this week's macro measure. It is Sunday, April 16th, a little afternoon on the East Coast. I'm Wayne. My partner Ryan's working on our market outlook overview for the upcoming week. And we are going to get into macro measure. It's another one where I just had to cap it. There's absolutely too much going on out there. It's been a really amazing year in terms of interesting junctures and developments already. And we're not even through, I guess, the first third of it completely. But here's our trusty disclaimer from Market Rebellion. And here is our intellectual property rights notice, if you would be kind enough to memorize that quickly. Thank you. Then the next thing would be our planned program. So I'm going to leave this up there just for a few seconds if everyone wants to screenshot it or maybe just pause the video and come back to it or something like that. But anyway, there's a lot to cover, and I trimmed a lot out, and I don't see how we can get away from this with the kind of market we're in right now. But I like to just make it all super easy and shorter, but it just really isn't. So a lot of this I'm just going to kind of cover quickly and then just leave it there because there's just too much to cover. And so I'm going to just spend some more time really trying to show why I think we're on the cusp of a breakout, but we still have to be careful. It just hasn't been easy, and it remains that way. Here's the second part of it. And this is where I've got kind of like back burner factors we've been talking about. I cleaned it up a little bit, and some things that I just are my way of looking at things, and the simple sort of baseball card condensed, back at the baseball card condensed, let's get to the point way of looking at things in the macro US economy macro picture. And that's still there. So I'm going to leave that there. And if we end up with two different slides for now, then that's fine. And of course, it will change over time, but we'll see. So I'm going to now kind of rearrange things. So just bear with me. Get rid of the slides. We don't need those anymore. And then we'll get into the technicals. And we're going to start here. Now this is called screen 2. So from week to week, Zoom just looks like they reassigns things. So I'm starting out with a bigger picture view of the SPY, and I know it's tough to see, so we'll definitely reduce this. But I'm just going to kind of bring that bigger picture view in, and everyone, I think, remembers the situation we were in here. I'm very, very grateful that Ryan and I became as concerned as we did at the end of 21 going into 22. And then we're still concerned now because we still think there's a lot of potential despite a lot of other things that are positive, which I'll try to show. But this is really your bigger picture daily view that's really condensed. So what we want to do is just try to focus on the here and now more. So let me get us, come on, Thinkorswim. Thinkorswim's kind of fighting with me a little bit here. I don't know why. Everything's been rebooted. So let me just give us a little more, need a little more data to work with here. This isn't a good sign that Thinkorswim's acting this challenging already. But this is kind of bringing us into that nearby information, nearby price action. And I'm going to move this up a little bit if it allows me to. So the case I'm trying to make is that I still think we have to be careful. And the reason for that is, right, you still, at this point, you're making higher highs and higher lows in here, but you're also below this high here. And you're a little bit higher than these highs right here. So it's kind of a little bit of both, right? Where you're kind of in the middle again. And what we have to note is, though, that this low is a little bit higher than, of course, this low back in here, this low here, and then this is what we've been calling the bear market downtrend line for many, many months or years, a year plus, I guess, at this point. And I want to try to enlarge that and then focus on it, because we did get above there after sort of double bottoming here on this low. And then we came up, hit resistance where you would expect to, came back down all the way down below the 200, which is that violet kind of purple line. And we came to the bear market downtrend line and literally hit that, right? The where I have it drawn. So that launched this really strong rally of just, again, mostly shenanigans, right? End of Q1 shenanigans. We talked about that. Fortunately, we were prepared for that as a potential outcome. And the gang certainly delivered on that, right? That was really remarkable. But the past 2 weeks, ever since then, we've been wondering, well, what's next? It just hasn't been an easy read no matter what we do. And so even now, after that second week in a row where we said tough read, we still kind of have a tough read, because is this the beginnings of a breakout attempt, right, from this kind of relatively narrow consolidation? I mean, if you look at it in bigger picture, it's not nearly as impressive as the way that Thinkorswim is making it look now. It's a little bit more narrow. I think that's a fair view of what it really looks like right there. So you've been in this narrow range, and we had said last week that we were looking to get back above Tuesday's high, which I think was right here, and then possibly break out, or I think it was Friday's low that we were looking at as a possible breakdown, which would put us right there, 4.6. And so we didn't break below Friday's low, and we stayed above that, and we the entire week, and we did get above Tuesday's high, but there wasn't any follow through. And so that's always the case. So what I'm going to do now is just move some of my comments that I've got that I'd like to cover around, so I can check them out while we go, and we'll talk about them, or I'll bring them back up and we'll talk about them. So I want to conclude on the technicals right here. So if you start to try to be objective, right, which is what I try to do, I try to be as objective as possible. And you can just look at all the longer term SMAs. Those are all upsloping. So this is the 150, the 200's right there, the 100 is right there, the golden one is the 50, and then the 20 is the light blue, the red is the 15, and then this is the 10 in white, and they're all upsloping, right? And you're getting some crosses of some. I'm not really big on the crossing as for timing and things like that, but just a positive factor that a lot of people like to see. A lot of people like to see rising SMAs in the long term, and a lot of people like to see when stocks barely exceed the shortest term SMA, in this case the 10, and manage to really close at it or above it, right? That's what people like to see. And so it's doing all of those things. And we think we are still in it's dubious camp. We still think this is really about brute financial force moving things up. But at the same time, right, it can't all be about that. I think there's a lot of true believers out there that think they're front running a soft landing, and that there's going to be a new bull market that dawns. And we're going to go through everything about that. But right now, I have to say, like, look, in the nearer term, with this near term price action, you're getting higher highs and higher lows. You're on the cusp of making a new high potentially, but you at least could challenge that if this breakout becomes a little bit more real. If you get up there, will it be probably short-term overbought? Yeah, probably. Will it need to back off from there? Probably would, and then would probably need to go. But you just never know, right? We just don't know what news could be driving something like that. But as we've said for a while now, this is the scenario that we talked about many times. And if it does get, let me just try to get us a 1 year, easier to work with, I think, at this point. If we did get through this, I think, right, that's when we've been talking about, well, it goes up here, and if it can really exceed that, this 431, 432 level, let's just call it 432, I'll round it up. That's when it's going to really, I think, that's, for me at least, that's when it really will break the backs of a lot of people, and they'll capitulate technically. Maybe not their macro take on things, right? Maybe not all that, but I think they'll have to look at it and say, well, wow, this is really taking out many highs now, and with a few highs right within that bear market. And then a lot of people will say, well, 2 highs is an important development if it can get that far. So I've been talking about that as kind of one of my scenarios, but we have to do things right incrementally, and so I can't really start thinking too much that that's odds on until we're closing above here. And if we're closing with a 79 on the daily RSI, that unless there's news, right, dramatic news, then you're very unlikely to do that right away, right? Because that would require a push of about another 3 to 4% to really exceed that. And that would be unlikely in most markets when you're already over near 79, 80 on the RSI. So that's the kind of background information there. Now, the other thing that I think is important to note here, and this is why I've been saying in Rebel Pit and that I've got to give the bulls their due. I've got to respect this price action and what they've been able to do so far. And one reason for that is that when they bounced off of this bear market downtrend line, it got converted to support potentially. And of course, it did support in that particular instance. And so a lot of people love that, where you pop through, come back, right? You struggled to do that for a little bit here. Then you were able to pop through, came back to it, closed near there, opened near there, ran, and then retested it yet again, and then ran strongly. So that's something that a lot of people love to see. It's kind of like textbook. If you want to be a bull, you love this stuff, and now it's really going to start going. But the reality is this kind of shady end of quarter window dressing markup mania that we talked about, that we were ready for potentially, they haven't given much back yet. That retracement of that is not very great. It's not even a 38.2% retracement, as you can see my fib retracement levels drawn there. So you got to say, well, that's good, right? In terms of interpreting what's happening, that is a positive sign if you're a bull, because you're giving very little back after a very strong run. And so in other words, they're holding most of their gains. Then right from there, what they've done is churn it for a while, which is what you like to see, removing some of that immediate overboughtness, held on to the most probably aggressive level of rising SMA support, at least the one that I chart. They've held that since, and they've got all these other positives working for them, and they're on the doorstep, right, or knocking at the door of potentially challenging the highest recovery high that we've seen since the October lows. So as much as you will hear me kind of make cynical comments about all these things just from watching these guys operate and not really buying the soft landing Kool-Aid and drinking it, the Fed, with all the Fed, I guess, the Fed's deformations of our system, I just don't have a lot of confidence in the Fed engineer a soft landing. I think they always tend to overdo it one way or the other. They certainly overdid the 0% and all the QE. That's what brought us to the brink of disaster. But that's maybe what they're there for all I know. But at this point, you've got to say, well, strong uptrend out of there, holding on to gains, narrow pullback, right? Narrow range, mild pullback, poised, right? Knocking on the door of challenging these highs. I think it would only take really, you're looking at less than 2%. And remember what they've got rally fuel, as I've been, calling it, in the form of EPS beats. So what I probably should do is kind of back off from here and take a look at some of these notes and a couple tabs, not so many, in my browser, and then get back to showing other technicals that I think are generally right. You can't really argue with them at the moment. Now, if you did see a big reversal on news, of course, everything could change quickly. That's just the way it is in the markets. And that's what a lot of people have trouble with, is that they hear someone say, well, this, and this looks really good. And then 2 days later, they're hearing the same person, I should say, reading the same person on Twitter, changing their tune. But that's really what you have to do as a trader, in my opinion. And you go with your best efforts in the short run and be prepared to course correct, because the market is great at throwing little squiggles and wiggles and waggles and knuckle curveballs and all that kind of stuff at you that you just have to deal with, right? But the other thing that we should mention is that when I look at my grid, my control grids, the spiders, for example, they are at I think we're at near, well, actually, I've got a different RSI reading right there. Hold on one second. Yeah, that's close. It's close. So yeah, no, that's actually right. So I was looking at the wrong thing. So you're here. Where are you on the daily RSI? We're at 62. And so, obviously closer to overbought levels, but not really quite there yet. So if they did push this, again, without news, it probably would be really hard for them to push it through in one fell swoop and just keep going, because it's already, by the time it gets there, it's going to be a short-term overbought. It'll more than likely be that way, unless we see more corrective action and we get even more consolidation before that which may not even happen. We don't know, but I'm just saying that's one scenario. So, but about getting back to the control grids are just keep sliding more in the hands of bulls, right? So the bulls just continue to grasp a little bit more control, and I would say in the face of everything. And like I said, I've got to give them their due while they deserve it. Can I be skeptical the entire time? Sure, and I am, but I'm not going to fight against them yet when I keep seeing them grab a little more control of different trends. And when they do that, right, as irrational as it may appear, I just know not to fight with that, because it can be very, very painful. And of course, you can actually lose a lot of money fighting against a trend, as anybody with any experience knows. So that's not something that I do. You could also argue that there's the strong move off the lowest low that we saw during what could be the end of the bear market, and now you've been really range bound for a while, and that's holding on to, at this point, it's got most of the gains that it made, right? So if you look at from low to high up here, I don't know what percentile you're in, it doesn't really matter, but you're probably in the 90 percentile or greater of the entire move from low to high. So if you want to say, well, what are they gravitating near? They're currently gravitating near the highs of this entire move, and they've been consolidating for a while. So you might just get, like I said, it might be, if we do have a bullish scenario that plays out, could be the quick pop up there, and then you pull back, and then they use this level we've talked about and really at this point it's 405, 407, 408, 409, and then this 412 level. There's 400 support. There's so much support beneath here. And again, you've got rising SMAs. And if we take a little bit different view of it, which might not hurt to do, if I say to think or swim, if we take a little bit different view of it, we can get this weekly. And I think that's a little bit cleaner of a look. And that cleaner look just is telling you, right, so far, right, this thing is on the cusp. If it broke out above that, say, 100 week, which is at 420, that would seem to be a big deal, right? Because that's really the last of the SMAs on the weekly. And you can't see them here, but on the daily chart, there's gaps that it could go back and fill there. And that's when I start to care about gaps and factor them into what I do in terms of the charts, because I don't really care about a gap if the gap was made a long time ago and I'm still a ways away. But I start to factor that gap in when it becomes a possible close, right? And there's a couple, you're in the proximity, in other words, where you could possibly close it within a few days. Now, I also care about them when there's super bull market moves or in super bear market moves, super momentum phases, but really I don't factor them in when you're, let's say, down in here. I'm not really looking at this gap. I'm looking at other ones that are close by, because the chances are those will get filled maybe, and we have to do a lot of work before this will ever get close to getting filled. But that's I think that's part of it right now. So I think if you look at these charts objectively, as much as it's really 180 from my macro take on things, which I'm sticking with, and not out of stubbornness, I just don't see the reason to start thinking about a soft landing. I think what will probably end up happening is that the Fed, and let's bring that up as a matter of fact. So let me get that going. We have that down here. So let me come back to this. We'll take a look at my other comments that you may have snapshotted, but let's take a look at a couple things, and this will save us time. Here's some visuals to at least focus on. Right, the May meeting in early May, we're looking at nearly an 80% chance that we still go up a little bit. So my take would be the Fed is probably overdoing it, right? I think you're already seeing some signs of moderation, but this is what the Fed typically does, so it's not really a surprise. I think rates should have been handled a lot differently, but I'm not an expert on that at all. That's the way they do it. I don't really know their motivations, but I don't think their motivations are for financial stability and so on and so forth. And let's just have a quick reminder. We're in year 3 of the presidential cycle in terms of returns. It's the best year, nearly double the second best, which is the following year, right? Next year. We're actually in the sweet spot. This is all just quick rehash. We're in the so-called sweet spot that runs until really near the middle of the year in that third year. So again, this is what the gang's been up to. And they've been off this trail a little bit here and there, but for the most part, they still, I think, are keeping this intact. If I'm honest, I think they're keeping it intact to this point. This is another thing we've looked at. You've got more bear markets that end in October. Well, we all just looked at that October bottom, and that October bottom so far is clearly held. And that tends to be by far, right, the most, I guess, frequent time where you see bear markets bottom. Currently, right, if you want to have a little bit of a view on things, the CNN, again, imperfect CNN is probably emblematic of things that are imperfect. But this measure they have maybe isn't the greatest one, but it's something we can access easily. And they've got some greed in here at this point, right? It's not in extreme greed, but it's not too far from extreme greed. So it's a situation where it kind of brings us back to, I can argue both sides. Could this be a false breakout? Sure. Is it a little bit greedy right now? It definitely is. But could it go further? Of course it could, right? And I don't think it's extreme right now. They're saying that the market momentum is, and I would tend to agree with them on that. But I don't think it's extreme. I don't think it's where it's a no-brainer to start shorting. I think there's still room in the tank to go further into extreme greed, and RSI readings are one of my gauges for that. And they're just not that extreme in my opinion right now. The other thing is, we've been noting this, pessimism stays above average. And so look, when people are doubting things, that usually is supportive of a higher stock prices in the short term. Just is, right? It's just the way it goes. It's just a contrarian factor. So you've got that. This is just all quick rehash. This is even still rehash, but then I've got something new I'm going to share. Remember that there's buybacks, right, that are going to be record buybacks. So I'm not sure exactly when all these kick in, but these guys, if anything, these guys are about self-aggrandizement, self-preservation, making themselves look like champs. And the one way to do that is to just continue to buy your shares back, support your stock price, and then make your EPS look even better, because you've got fewer shares to work into the calculation. We have another little comment there on buybacks, and you'll see that they're back. Corporates are in their blackout period, but will start to exit in the coming weeks. This is from earlier this month, right? So this is on the verge, potentially supporting the market, which dovetails with this stuff that we're checking out here, right? I mean, that would potentially help these efforts along, right? So just keep that in mind. And if you want to look at some things, you could go to Zero Hedge, and there's a story, and it's probably going to surprise some people, but it's basically making the case for bullish factors, right, that are in place in the market. And so sentiment somewhat supportive of further squeezing, which we've been saying, right? The squeeze after squeeze after squeeze. Overall shorts somewhat supportive for further squeeze. Nothing new here, but the extreme short position in SPX futures is something, right? Again, I keep talking about poorly positioned, ill-footed. This is the type of stuff I'm referring to, right? I'm not going to go into this, but if you want to look into the Martin Zweig's breadth thrust indicator, excuse me, right? This occurred recently, and as they say, right, it's 6-month forward returns are about 15% since 1950, and has a perfect track record. So I guess that's pretty hard to beat. Don't know, honestly. I knew stuff about, I guess I should say I knew a little bit more about that. I kind of forgot it. So I don't really have all that, like the quick recall on that right now, but I, known about it for a long time. But, there's always something interesting that way that's going on. But the problem is, right, that the circumstances are, it's a nice thing to look at, but it's the circumstances that you're in that you just can't ignore. I think the context you're operating in, and I think there's just still a lot of risk. Look what they've done with these big players, even though they took a break last week. We said last week they were short-term overbought. Now they've taken that breather. The earnings are expected to trough here. So this is, again, why I think people are positioning for a soft landing, better times ahead. And I believe that there's been a massive amount of front running, that this is all going to be well and good. I think, and that's possibly very interesting, but it's also possibly very dangerous. So they're calling this inflation surprises and positive economic surprises is Goldilocks for equities. Can't argue there. If things are really getting better, I doubt the sustainability of that. But for now, we'll grant them that's occurring in some ways. And they're talking this particular article. A lot of this comes apparently from Barclays and other sources. But this is interesting because they're making the argument for a soft landing, which I say personally, I just don't see it. But I've got to look at what their argument is, right, to see what am I missing. I don't have time to do this all day, every day, like some firms do. So here's their argument: inflation moderating, and they're saying that the consumer remains resilient. The data was encouraging on Friday, above consensus. The big banks are doing well. Again, I think that's all engineered, and I'm not saying they're not. I'm just saying that it's all engineered to look as rosy as possible. And they're drinking the Kool-Aid on the soft landing with the micro and macro data that came out. That's their little summary. So you might want to read the whole thing if you want to go in depth on that. But that is the stuff that's, I think, worth sharing, because a lot of folks in Rebel Pit, and I think rightfully so, a lot of the folks there are, let's see, I hope this puts this in the right spot. And of course it doesn't. So I'm just going to leave, I'll just leave this up anyway. But a lot of folks in Rebel Pit, I think, are rightfully bearish, right, in terms of their big picture view. I mean, that's how I feel as well. But they're not trading it that way, right? To a large extent, we're trying to get folks away from trading that way. We want people just to trade the current price action, because these are short-term trades. But I understand exactly how they feel. So let's just review this quickly, and then we'll get back to the charts. Last week, we said not another easy week. We called it a mixed bag, and that for the second week in a row. And I think that was a decent read. We did say watch Tuesday's high. We already talked about that in Friday's low. Friday's low never was exceeded. Tuesday's high was on Thursday, but we didn't get a follow through on Friday. Now, I don't know if that was expiration related. Could have been. I just don't know. Then we were, again, that's where we got left off, and there's a typo there, but false breakout attempt. We just noted that, right? We don't know if we're seeing a double top or the start of the real thing in the SPY. We did note already that the SPYs did not crack their 10 SMA or stout flatline levels that are just below the action, right? So that it's holding and holding and holding. I'd say that the sectors were not very helpful overall when I reviewed them. I'd say they're a little bit noisy. It's kind of like they're tentatively buying into the bull action, but not really in a convincing way yet. So we'll see. I think the jury's still out there. I still think the most likely scenario was that we were primed to go higher with EPS beats on the horizon. So we did get EPS beats again. That's in quotes because it's to me it's clown show material. In a real world, EPS beats would be about 50% over the course of time, but it's closer to 80% over the course of time, I think, last time I looked at it. So that just tells me that, of course, to keep bull markets intact, they always favor lowering the bar on EPS expectations. And that way companies hurdle the bar and everyone claps like seals and puts their baseball caps on. But yeah, I just get tired of watching that because I just would love to see some folks be honest with the investing public that's not professionals doing this all day. This level we've been talking about, again, it was we talked about it coming into last week, and if it would matter, there was a lot of action around there, and we did see that the SMAs were doing their bullish curl, and in the end they tried to follow through on that. Again, we don't know what happens. Here's where we are though now. We said, we just talked about this, we're near the top of the range, we've got higher lows, and we have rising SMAs. We noted that short positioning is still very high. And again, you can take a look at that when in doubt. So if you're not sure what they're going to do and you don't see any trend of what's been happening in earnings, I always look at they're going to favor the upside. So that's my way of just saying, if you ask me, right, if I haven't done any research at all, and I'm saying, I would say, look, odds are that they'll try to engineer a beat to treat stocks bullshit, like I just said. That's basically my take on that, because we're in that season right now. Well, I don't think we can force anything. We just talked about that. I think you still have to wait. And we did notice, right? We did note this, that we're not super greedy. There's fuel there for an EPS. They can run stocks on EPS. And we talked about the bear market downtrend line, how it's held on. I would say that market breadth or sentiment, right? It's better in some way, worse than others. Some things I looked at got a little bit better, but new lows ticked up in a couple areas as well. So that is a little bit of, again, a mixed bag, making it tough to read. This is big, though. This massive amount of front running capital, right? There's been a massive bet. I mean, I don't remember too many bigger than this in my time. And I go back 30 years plus at this point, that the bear market's over. And that's what sets up a dangerous condition to me, right? This is what makes the next leg of a bear market, should we have one, makes it where it could get incredibly ugly, because a lot of people have already bought in, I think, dramatically shifted cash back into the long side. Now, granted, there's still a lot of shorts out there too. But all I'm saying is, if the wheels start to come off, there's a lot of people trapped long that are probably going to want to get out. And when everybody wants to get out, it can turn incredibly ugly quickly. So that's what we have to keep in the back of our minds. Certainly, that could happen anytime. I don't expect that to happen, with the price action as it is right now. But I do think you got to be on guard for that stuff, as almost always, right? Because that potential exists. I still think we're in a singles and doubles market. But as I noted, the bulls keep grabbing more and more control in the face of everything. And we are near a breakout level. We just talked about that. So we talked about a lot of this stuff, which is good. This is stuff I'll just leave up here. I still don't think the financials are out of danger. Okay. But we know that all the major index ETFs, well, maybe not IMWM, but the major index ETFs and the VIX do not seem very interested in the woes potentially in the financial space. We already talked about that. I still think this creates a credit crunch and really throws a monkey wrench into the gears of the economy. I could be wrong. That's just a regular guy's take. I'm not spending all my time studying this stuff. Spend all my time trying to find good trade ideas, honestly, and commenting is where I can. I still see things this way. I still think there's a lot of bad stuff, but again, this is all the stuff that they're using, I think, to move the market up. And it might be kind of like shady, but that's the way it is. It's always been, to my knowledge, at least the time I've been in the market. Short-term sentiment, I don't see it as overly bearish anymore. I do still think there's a definite group of hedge funds that are positioned overly bearish, with a lot positioned that way, and they could really get themselves in trouble. But I don't think that that attitude that permeates everything in the short term right now. I think more and more people are thinking they're going to get, well, that's kind of where CNN comes in with the greed, right? More and more people have been sort of expressing it, that they're getting more bullish or willing to take the bull side, at least for now. I don't know about it, but I sense that there's Fed money coming into the market based off of what they did with the banking system. We did note buybacks, and a lot of these CTAs could still flip even more bullish if we break out from what I've been able to track down. So the commodity trading advisors, basically hedge funds, they might have to flip with their essentially systematic approaches. That would only add fuel to the bull fire. I'm not going to go through this just because in the interest of time. So I'm just think that's all important stuff that we'll keep in mind that I think is being ignored right now. So now we can get out of this, and what we'll do is we'll get back to the charts. And so that this control is really close to becoming even more bullish, right? So again, my scenario in the near term would be they keep trying to push this. It runs into trouble up near, basically it'll be, well, if you look at Friday's high, probably only about 1% more, and this runs into trouble, you would think. And you get close to overbought. I think that would probably necessitate a back off, but if that back off is again mild and holds on to these SMAs fairly well, they might be able to take the overboughtness out of this and then Phi Slamma Jamma this market right up. So be careful on that. You've got to be respectful when they're so close to potential breakout level, and they continue to gain more and more control. Now, let's take a quick look at this double chart. I think is the one. And all I want to show everyone on this is the fact that some sentiment is getting better, right? So the longer term stuff like the McClellan summation index, which is more of a longer term slow to response indicator, that continues to head up. Meanwhile, right, the McClellan oscillator, which is clearly a lot more sensitive, which that's what I mean by some measures look good, these two are just a few, but this looks not so wonderful. Like it could maybe take out that low. If we wanted to, we could drop a support line on here, because I'll put a support line on anything. I'll threaten to put a support line on anything at the very least. And you could say, well, I'm not so sure that looks that great anymore. Right now that it's cracked below there, what if it cracks below here? But that's possible, right? However, right, other things like this up here, if you look at this one, I'll try to make this a little larger and it won't let me. But this advanced decline line stuff that I've got going on here, this, right, is still uptrending. This did make a new high only through Friday's kind of ugly sell-off from the highs, false breakout type stuff. Did it really correct back down, but it's still kind of holding trend for now. So these are just a few things. Some of the other things, like I noted, are on different screens or different places, and I don't want to belabor that. But overall, it's not terrible, right? It's not bad. It's not like we're seeing a massive amount of new lows being made. We are seeing advancers and decliners, like a kind of a mixed bag. And we've said that for 2 weeks, the market's been a mixed bag. And even if you look at this, it's kind of been a little bit of both. And so it's been a tough read, right? There hasn't been some kind of nice, strong, sustained action. That ended a few weeks back with that surge we saw, and no one's really gained the upper hand. I think the bulls have won slightly on that measure right there. You can see that. So overall, again, it just tilts a little bit towards the bulls, but I don't care what market you're in or what stock you're looking at, unless you know something that other people don't know. If you're just trading neutrally, right, neutral knowledge against the market, and you have the potential for a breakout, you can't think it will definitely happen. You've got to say, what are my scenarios? Well, one is it really does break out legitimately. The other one is it breaks out and comes back, right? That's another possibility. Finds support and goes again. We've talked about that. Another one would be it makes it look like they were breaking it out, and then they pull the rug and we go right back down. So you always have to be ready for that type of stuff. It's not like that's anything unique right now. So I just wanted to get that across. But we talked a lot about the SPYs. If we look at the Qs, let's take a look at those. Those, I think there's a massive amount of money that's gone in here. I think you could see like that sort of intermediate term trend like this, that looks pretty good, right? But I think a lot of people are still willing to hang on to it being corrective of the larger trend, and I can't disagree with those people. But I think this is, again, this would be the equivalent of what we looked at in the SPYs. So if they get the Qs up towards that 330, call it 335, and they exceed that, that would be something where people would think, okay, well, the market's now really telling us something, and look at how all these SMAs are really rolling in our favor now. They could be right. I'm not saying they're going to be dead wrong. I'm just saying that that would be probably one of the more vicious scenarios that ultimately longer term bears could lay for bulls. So that's where I'm coming up with, we could still have a bull and a bear trap. This could be a longer term bull trap, and things really start unraveling and down we go again. Or right, we could have that bear trap that we talked about before. So don't want to go into all that, but the Qs arguably, right, higher highs, higher lows. And right now, let's just take a look at the RSI reading on that. The RSI reading is at 60. So not overbought, not oversold, more leaning towards overbought, but not really there yet. And so could it work its way up towards a little bit, 1 more percent, and easily? Sure, of course, right? It could easily do that. So you could be on the verge of making new highs there very easily, right? Remember, you've got to look at the economic calendar. You've got to look at all the earnings that are coming out this week. It's going to start picking up and then picking up and picking up. So there's going to be a lot of volatility. You got to keep your head on the swivel. The diamonds, we'll take a look at those. Now, these actually have, this I think has some lines I left on it. And there's another situation where they've been able to exceed resistance, and they've got rising SMAs, and they're getting there, right? Despite everything, they're getting there. And you've got a 63 reading. These are all in the low 60s at this point. A lot of resistance, right, in the next percent or two for the diamonds, you would think. So might not be easy. I really am not in love with committing long-term here at this point, but I would certainly be still willing to trade this bullishly in the short term. But it's got its work cut out for it if it's going to attempt to take out this high or retest the highs up here. And clearly, right, it's got this longer dated one that probably is about the same on the chart, really, as what we've seen from the SPYs and the Qs. But you really look at that price action in those, and it's similar, not exactly the same, but it's similar. And it's very hard to really argue that this thing is just on the verge of collapse. The only thing that would give me any kind of hope that it's on the verge of collapse is that it took out resistance with a higher cluster low being put in here, and that might convince more people that this corrective phase is over and they're going to start taking this thing up again. And by corrective phase, let's just pretend I drew a support line in there and you already have the resistance line up here. So that would be, but overall, it's pretty hard to say, well, no, that price action's terrible. It's not terrible. It could be ultimately be misleading, but it's hard to say, no, that's a terrible price action in there. It really isn't. And it kind of boggles my mind if I gave it enough time to think about it. You get an idea of what I meant. But it's not, right? It is what it is. And I've been through this so many times that I've seen these guys really mark stocks up just to levels you can't even conceive of in the face of so many things. And then ultimately your macro take turns out to be right, but they were able to really achieve all this despite everything. And if you look at it right now, you're not that far away really from that all-time high, right? If you look at that, you're closer to the all-time high than you are to these lows. That's even though you're not even back here. So that's not much of a bear market in a way at this point, right? You have to give them their due. Now, I think the outlier is probably IWM, where again, probably, right, these higher rates and banking problems, tighter lending standards, all that kind of stuff on IWM is a bigger factor. Now, there's the corrective. This is the corrective phase here that I've got identified. And here's your kind of trending phase. Of course, there's other corrective phases within the bigger picture. But here, right, you just don't know. This certainly has the roughest look. I think there's no doubt you have your SMAs flatlining or rounding over in terms of the larger picture ones. You're below the 200 and 150 here, right? And you haven't been able to get that giddy up and go and to start moving up. Now, we can say all that, but notice that it would only take about what, from where we closed, it would take about a $6, or I should say 6-point run. So we're looking at maybe 3.5%, something like that. And this thing would bust the 50 and then be above all of them and be above, or be at least near resistance on, if I extended this resistance line here all the way down through here. So that could change quickly, you know. And if you wonder what I mean, I may as well just add that. And I hate that I always overdo it, but let me do this one to kind of give you that idea. You know, there's that one right there. You could draw other ones, but I'll extend this one out here with the pointer. If it lets me, please let me grab the right line. I don't want Thinkorswim fighting with me. And that's the line I'm trying to get us to, right about a little bit too much downslope there. All right, general idea, I can't fit it to perfection, but it's basically the 50 at this point. So if they get it back above there, right, then it'll be above this corrective. It'll be leaving this corrective phase here, and then it'll be trending relative to the intermediate. It's still, I think, overall not very good, but you've got to just give them their due on that. And this is clearly not overbought with a 48 RSI. It's neutral, very neutral. So we'll see, right? They do. The interesting thing is, it's these lows are higher than these lows, but they're lower than these lows. So that's a very tough one to call. I personally think this is like canary in the coal mine. I also think there's a little bit of canary in the coal mine in KRE. So we don't usually talk about that. We'll talk about this, I guess, a little bit in sector situation. But look, I don't think that the regional bank ETF really has gotten its mojo back. I mean, that to me is a concerning close there on a Friday. You're not very far off of the lowest lows. So could they pull this out of, you know, that terminal velocity down again? Yeah, they could. I think I've got or had at least some bearish ideas on in this area. So this particular ETF and other things related, but that's concerning. Now, another thing that I want to mention here is related is IYR, and IYR also kind of ended up with a complexion that I don't think as a bull you can really be in love with. That complexion right there, that to me looks concerning. You know, that your market kind of works its way back. You were participating, and then you have this sharp reversal. So I still think there's something there. The market thinks there's something there still. Maybe they'll support this, and you know, on Monday, and it'll be up and away for all we know. But at the snapshot we're working with, that does look concerning. So again, IWM, KRE, IYR, real estate, regional banks, right? The smaller companies, the ones that are dependent on, you know, a lot of this is very dependent on the banking, obviously the financials, that all looks rough. Now, the XLF, I think, benefited from, and we had a nice trade that I think some folks did very well on. That was a UOA based trade, because somebody came in and bought 100,000 calls here that were dirt cheap. And it was one of those ones that we knew that there were earnings coming out the next day. They bought cheap on some of our traders, I think, got in and were smart to take the money and run once there was a nice gap up and push. But that was, you know, that is what it is. But that's still, yes, it's rallied nicely, but I think this is earnings driven. I don't think this is really a real changeover to everything's wonderful in banking. But I do want to note a few stocks that I came across that are hard to argue with. Like here you are, right, with the consumer being, again, by some standards resilient, by my way of looking at it, about to be under tremendous pressure with high costs due to inflation, higher rates, a lot of layoffs potentially still to come. And you've got Visa and MasterCard in this case working their way back up. Now, maybe that's in anticipation of the earnings, but these charts both took on, right? They're both trying to work their way back up. And that's just very resilient. Very resilient. You can argue about it, how it's illegitimate, and it may be, but on the surface, at least, it's very resilient that they're able to do that. So that hasn't shown up yet. The other things we should look at are DXY. So the dollar held on a recent low, and so remember, the dollar sliding lower and rates sliding lower. That's been good for stocks, and of course it's been bad when things have headed in the opposite direction. And you did hold out there very close to this low that we talked about way back when, and now they're trying to reverse it a little bit there on Friday. I don't have a lot of faith in that yet, but what do I know? I'm certainly not looking at all that stuff. I certainly don't have the time to do that. But in terms of, is it oversold? It's close to, it was close to oversold levels, didn't quite get there, did find support for now, but all the SMAs are downtrending, right? So I think the dollar could become a safety trade situation where things are, excuse me, I thought I had this turned off. Things could end up shifting around on news, certainly. And TNX is trying to do a little something and move back up. But so you keep your eye on it. But I kind of still think at this juncture, it's got its work cut out for it. So those are some of the big things. The only thing I'd really want to cover now, since we did look at XLF, is just a couple other things. XTN, because I believe financials and transports are important. And the transports are not really all that impressive. I don't think at this stage, I think XLF is more impressive because they were able to use the earnings, but that's not telling a wonderful sign that, hey, economic activity is going to be fine. I think that's telling a little bit, XTN is telling a little bit of a concerning sign. And then financials are doing the same thing. And then SMH, this is a leadership sector. Ryan makes it a point to talk about that. Be careful here, right? It's still holding its trend of the 50, right? So that's that golden line there. But look, these short-term SMAs are rolling over, and this thing's been a leader for a while, and it's really had an incredible run. And it kind of, it's a very important space. It might have bottomed a little bit before a lot of other things did, and has helped to lead the charge back. But this is looking a little bit concerning right here. And I think the bulls have given up a little over the last couple of weeks, have ceded a little more control. So they may still have a grasp on it, but they're on the verge of ceding more control to bears there. So I think you got to be careful. Remember, that's a leadership sector, right? So keep your eyes on that, because that's just a big deal. And BIX. I can't get into all the sectors because we've got to wrap up to keep this somewhat reasonable. But this is incredible, right? We talked about this, that we were hoping this would happen, hoping it goes even lower, right? Because that will let us position ourselves with some cheap vol. But you're looking at levels right now that haven't been seen since the very early days, maybe the very first trading day or second trading day in 2022. So the next levels down on this are, mid-teens, not mid to high teens like we are now. So that could be very interesting. Keep your eyes on that. We got this came up in cocktail hour. I just have to admit, I don't know all the answers on the VIX right now. I don't know why. I feel like it's been suppressed. Someone commented in the cocktail hour that they thought it was being kept down. I've read things that suggest that it's being kept down. It does feel like it's being kept down to me. But I can't say, like, just go read this article and you'll believe the same thing. I don't know if I can really go that far. But to me, this is part of keeping the market players complacent and keeping market players from selling. This is what you would probably do. Just keep working this thing down, because people look at this as a fear gauge. And if no one's really afraid, oh, everything's fine. So, I would certainly not put that past any of our friends on Wall Street with the biggest of the, or I should say the deepest of the deep pockets. But it could play to our advantage if we, in terms of what we do in Phoenix portfolio and what I'll be doing personally, Ryan will be doing, because I think you could really position yourself with some outer month downside on the cheap at this point, or soon, even cheaper, and manage that and get yourself set up that if my macro take stays as it is and it ends up bearing out that way, then that would be a pretty good position to be in. I do like to buy not too far in advance in most cases, but because I'm too pressed for time all day long, virtually every day, with all the options activity that comes in through our services at Market Rebellion, I got to just devote all my time to that. And so I don't have the time that I'd like to do this, that, or the other thing. In terms of trading actively, I'm really just positioning myself for bigger picture stuff. But I think I've got to end it on that. It's really been a long one. Again, it's not an easy time. That's why I'm trying to spend all this time. And I had to just clip this because we have just too much going on. So I'm going to stop share, and I'm going to wish everyone a wonderful and hopefully very nimble week. Remember, you've got to trade around these big news events, and you've got to come through that, right? It's hard to forecast these things. Just keep your eye, I think, on SMH, KRE, IWM. Those are the things, right? Your dollar, right? Your yields. Keep your eyes on these things this week. And if you start seeing some troubling signs, that could be a little bit of foreshadowing. The breakout that we're talking about as a possibility may not pan out. Then again, right, if those continue, a lot of those continue to act just not worried, right, unconcerned, and things start to improve in transports and this and that, it could be a good sign. If semis hold together, it could be a good sign. So a lot for us to digest. So I hope that you got something out of this video that you can put to work and maybe help you out this week or in the future. I want to thank everyone for tuning in as always.